does take us to our talk of the tape. Where do we go from here with all this volatility? Where are we going? Let's ask Tom Lee. He is FundStrat's managing partner, head of research, also a CNBC contributor with me here at Post 9. Thank you for being here. So, Liberation Day didn't go as you thought, and you apologized publicly for that, which I think a lot of people appreciated. You're always a stand-up person about that. What now? Where are we going?
Well, I think a couple of things that we're thinking about is we know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. And if tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
Are we in a bear market? I mean, we're in a bear market, right? I mean, it almost doesn't matter, textbook, whether you say we are or not. It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes. I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person.
Are we supposed to buy into that or just stay cautious and on the sidelines, don't do anything, sit on our hands? I don't think people know what to do. And I'm not just talking in the CEO suites because they obviously don't know what to do. How can you? So what is the investor supposed to do?
Yeah, I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50. Or when the percentage of stocks above the 200-day drops to 15, those are almost guarantees of positive 1-year, 3-year, 5-year returns. So it depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical.
I hear views of, well, it's really hard to get uber bearish now because a headline at any moment, as I said in the open here, the market is waiting so hard for some bit of good news that if you're on the wrong side of that, you get a day like you had on Wednesday.
Yes. I mean, if I was to oversimplify the framing of this, U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside has it comes off dramatically, and I think stocks can actually do really well into the rest of the year.
So you'd be a buyer right now?
Yes, and with the apology that, of course, I didn't think Liberation Day was going to be this draconian, but yes, I would be buying stocks today.
What would you buy?
Well, one of the things we did for our clients last night is to look at what's called Walter Deemer calls sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in. Mm-hmm. There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think is washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound, including stocks like Tesla.
One of the world's largest and beloved semiconductor giants has been undergoing recent developments, leaving many investors on their toes. Nvidia shares have soared dramatically, experiencing an impressive 18.7% jump. This surge comes after President Trump announced a 90-day pause on reciprocal tariffs with China. This decision is a relief for many investors and stakeholders who have been worried about the impact of prolonged trade tensions. Could this recent shift potentially influence the semiconductor industry at large, as uncertainty still lingers? This is the best opportunity to explore whether or not this stock is a buy or sell. Welcome back, everyone, to Investocracy.
Equities just off session lows right now, giving back just about a portion of yesterday's gains. Our next guest says yesterday's big rally confirmed the Trump put is back. Tom Lee, FundStrat Global Advisors co-founder, managing partner, and head of research joins us here at Post 9. Tom, Good to see you. So, yeah, we were in search of perhaps some kind of a floor level, of a Trump put. Maybe we got there. I guess, first of all, let's go to what history says about these extreme type market conditions, right? We saw very, very rare levels of forced liquidation, washout conditions Friday, Monday, set the scene for the kind of forced buying, panic buying in a sense yesterday. But where does that leave us? Because a lot of those huge one-day rallies have happened in bear markets.
Yeah, I agree. I mean, investors, I think, were fearful we were being pushed into the abyss of a depression. And there's a lot of technical damage that isn't necessarily fixed by just having a one-day rally. So I think that investors are understandably cautious. But one thing that my friend Tom DeMark likes to call is washed out markets. Yep. And I think some things really got washed out, and that's what we're going to keep an eye on. I think it's actually kind of constructive. Like the Teslas and the Mag 7, they basically bottomed on Monday. Yeah. And so even though the markets were plumbing new lows into Wednesday, they were holding up, and they've made a big move. So I think there's an argument to me that high beta and the Mag 7 are what you want to watch. And I'm kind of in the camp that this is going to extend further, the rally.
So, I mean, you were bullish going into this whole thing, right?
Yes.
I think everybody did not expect it to be so severe. After yesterday, how much changes fundamentally around your bullishness? Because it's great that he paused on all the other countries, but as we mentioned, we are still going to have to face a lot of tariffs, and that could hurt growth. Yeah,
I think the upside case for stocks is impaired, right? Because the Fed has made clear during the midst of this that the Fed put, it really isn't in play until they have a better idea of inflation. I mean, we just heard that again. So I think markets then have to depend on fundamentals and then a policy path from the White House that they can't necessarily depend on. So I think markets are going to put a bigger risk.
But can they depend on it? I mean, the White House did make it clear that they would be flexible if things really started to get shaky.
Yes, but at the end of the day, I think companies aren't going to get hit as hard as we initially thought. For instance, even looking at these revised tariff rates, to me, there's still the ceiling. So even if this is what's in place now for 90 days, I think there's a chance things could still improve from there. And, of course, it could be better for U.S. companies, and there could be concessions made for U.S. businesses. So do I think stocks, do I think stocks are an easy road from here? No, I think it's going to be very challenging. But, again, I think so many things got washed out. I think the Mag 7 especially, that's where you're going to find opportunity.
Nvidia's stock saw an improvement from the 38% drawdown on April 4th. Now, the stock is only down 25%, an encouraging sign and a potential opportunity to invest. Amidst the dynamic ebb and flow of the stock market, Nvidia finds itself navigating a complex landscape. The escalating tariffs between the United States and China have posed significant challenges, intensifying the pressure on Nvidia's operations and profitability, and worrying investors. As the U.S. government aims to exert tighter control over chip sales, concerns mount over how these factors might shape Nvidia's future in the economic arena. Although the government removed chips, phones, and computers from the hefty tariffs on China, leaving only the original 25%, the escalation of a trade war is worrying. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
And welcome back here to Live Now from Fox. I'm Andrew Kraft. Let's get into some of these top economic headlines. Remember, we brought you the news yesterday that on Friday night, the Trump administration issued some exemptions for particular products under their sweeping tariff policy, including electronics like computers and smartphones, etc. Well, today on the Sunday shows, Commerce Secretary Howard Lutnick made some type of deviation from that. He appeared on ABC News's This Week there with anchor Jonathan Karl. I want to put this up here. So This Week says this: after Trump exempts tech like phones, computers, and chips from new tariffs, Howard Lutnick tells Jonathan Karl they will be included in semiconductor tariffs to be released in the coming months. Lutnick saying this is not a permanent sort of exemption. So that is different than what we heard Friday night and Saturday morning. A different line now on this Sunday morning. Well, our colleague there at Fox Business, Charlie Gasparino, tweeting this: a senior Wall Street executive with ties to the Trump White House described Howard Lutnick's comments about the temporary nature of the tariff exemptions as quote-unquote off message. So you see there, Gasparino now says the market will open way down again, since it appears the administration is totally confused. He says Susie Wiles needs to get control of Lutnick. He is a wrecking ball. That's what a senior Wall Street executive with ties to the Trump White House told Charlie Gasparino. Of course, Susie Wiles is Trump's chief of staff there. Well, the president just posted this on Truth Social. He says this: nobody is getting off the hook for the unfair trade balances and non-monetary tariff barriers that other countries have used against us, especially not China, which by far treats us the worst. He says there was no tariff exception announced on Friday. These products are subject to the existing 20% fentanyl tariffs, and they are just moving to a different tariff bucket. The fake news knows this, but refuses to report it. He says, we're taking a look at semiconductors and the whole electronics supply chain and the upcoming national security tariff investigations. He says, what has been exposed is that we need to make products in the United States and that we will not be held hostage by other countries, especially hostile trading nations like China, which will do everything within its power to disrespect the American people. He says we also cannot let them continue to abuse us on trade like they have for decades. Those days are over, he says, all caps, exclamation point. He says the golden age of America, which includes the upcoming tax and regulation cuts, a substantial amount of which was just approved by the House and Senate, will mean more and better paying jobs, making products in our nation and treating other countries, in particular China, the same way they have treated us. He says the bottom line is that our country will be bigger, better, and stronger than ever before. He says we will make America great again.
Despite global tensions, the company's formidable technological expertise continues to inspire optimism and growth opportunities. Catalysts like Blackwell could potentially drive the stock back up in the upcoming months. So, Nvidia's current stock valuation presents a notable opportunity for investors. Looking back at historical data, there is much to be encouraged about. Nvidia has time and again demonstrated an admirable capacity for recovery, particularly following significant market declines. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Joining us now is Mark Newton, FundStrat Global Head of Technical Strategy. And one of the things we've talked about, Mark, is whether there's, disregardless. I think that's right. Regardless, irregardless, and you got to do it twice. So
double negative.
Right. Regardless of whether we try to put Humpty Dumpty back together right now, is there underlying damage that's been done, or is this all kind of within the realm of what happens when you see a break in the markets and it starts healing itself?
Yeah, thank you. Good morning, Joe and Becky. Look, I think there has been quite a bit of damage in the last 7-8 weeks. However, equities have pulled back to an area that is quite important. We have seen evidence of now volume dispersion that's been pretty significant, along with just breadth really being washed out in recent weeks. So there is some evidence that equities have in fact made a bottom and or in a bottoming process. Now, that doesn't mean that we move straight back to the highs. I think it's going to be a 2 steps forward, 1 step back type process, or really an L-shaped stock market probably for the next 30 to 60 days. So a lot of volatility. That's not going away anytime soon. But there are at least some technical reasons to think that markets have stabilized in the short run and can try to work a little bit better in the weeks and the months to come.
Like what?
Can I just ask real quickly, when you say an L-shaped market performance from here, you mean we've already drawn the first line of the L, the downside, and now we're going to bounce around, not that there's another down leg to come before we get there?
Yeah, we've seen some pretty severe deterioration, obviously, and now I think we likely could go sideways for probably another 1 or 2 months before starting a larger rally. So I think we've stabilized. Tough to see a V-shaped, in my opinion. We did see, obviously, a very good move on Wednesday, but as we saw yesterday, we've given it right back. But this area is very important. We've seen signs of technology really starting to stabilize. this past week, one of the biggest moves in Mag 7 off the lows. That's very encouraging. This morning's evidence of bank earnings is also very encouraging for the financial sector at a time when everybody thought they would come in poor. So I think, financials is the second largest sector, of course, within the S&P, technology being the first. And, a lot of the pessimism and sentiment with all this money moving all of a sudden from the U.S. abroad, I think is really ill-timed. We've actually seen the U.S. outperform over the last week over Europe and also out of Asia. Most of the world seems to be catching up at the time when the U.S. is finally starting to stabilize.
The existing state of Nvidia's stock suggests a potential upward growth trajectory, especially when we reflect on its ability to rebound and adapt efficiently in the past. For investors seeking a dynamic and tech-forward addition to their portfolios, Nvidia emerges as a compelling and intriguing prospect. Will you seize the opportunity and invest in Nvidia's evolving narrative of success and innovation? Let us know your thoughts in the comments section below. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.